This is your LMAX Exchange technical update for Friday, January 20th, 2017. Euro dollar. So the euro has seen a nice correction over the past several days, but is now coming into some critical resistance. If you look back to the December peak at 108.75 and to the top of the Ichimoku cloud, which coincides with that level, you can see that the market is now at a critical inflection point. We still are confined to a downtrend, but there is the possibility that the market wants to break higher and compromise this bearish structure. So it's a bit of a wait and see right now, a question right now whether we're going to see a lower top ahead of a bearish continuation, or whether we see a breakout and a shift in the structure towards the top side. Again, for the time being, the downtrend does remain intact and there is risk for a lower top and fresh downside while we hold below 108.75. Sterling dollar. So cable has done a good job recovering this week after seeing a breakdown earlier in the week below 120. At this point, there is still risk that we see additional declines as the downtrend here remains firmly intact, and we would need to see a close back above the 24.30 area to take the immediate pressure off the downside. Dollar yen. At this point, dollar yen is still within the throes of a correction which could extend towards the 111 area. Overall, there is an uptrend here that's in play, and a higher low is sought out to have the next major upside extension towards 120. But again, there is still risk to the downside before the market considers the possibility of a bullish resumption. Euro Swiss. Euro Swiss is seeing consolidation, but that consolidation is a bearish consolidation, which could eventually result in a breakdown towards the 2016 low at 106.24. Aussie dollar. So Aussie has been flirting with resistance above 75, and the market is now considering the possibility of stalling out here and rolling back over. As you can see, looking at this chart, any rallies over the past several months have been very well capped up towards the 78 area, and while we could see one more push, we would really need to see a break and close back above 78 to compromise this structure. Until then, the risk is for the market to stall out in favor of a resumption of declines. Dollar CAD. So dollar CAD, after trading down towards 130, has finally bottomed out just shy of the figure, and now the market looks like it could be poised for a resumption of gains back towards some recent highs in the 136 area. Kiwi dollar. Despite Kiwi upside, the market continues to show signs of topping out after that 2016 high just shy of 75, and so this rally, despite being strong, is looking like it's corrective in favor of the next lower top and bearish continuation back towards 66.76, medium-term support. SPX 500. The S&P 500 continues to trade just off record highs, and the uptrend remains firmly intact here. There's a risk for a break to fresh highs towards 2300 and beyond further up, unless, of course, we take out what could be a potential neckline of a double top formation in the 2232 area, which would then confirm a structural shift and accelerate declines. But again, this is a market that has not wanted to move lower, and we would need to see a break below that level at a minimum to open the door for that conversation of a bearish shift. Gold. So gold continues to be very well supported on dips right now, and the market could be poised for fresh upside eventually all the way back to the 2016 peak at 1375 after the market several days back in 2016, late 2016, stalled in the 1120 area. Overall, this longer term chart does show the possibility of a longer term base, and so there is risk again for a resumption of gains back towards the 2016 peak and beyond. Look for any setbacks to be very well supported ahead of 1160 now, again in favor of that next major upside extension.